in Michael Rankin. He is the senior market strategist at the New York Stock Exchange. Michael, what is your takeaway from today, right across the board?
Yeah, Ashley, thanks for having me. Look, I mean, it was a rough day, and that's not terribly surprising heading into a weekend. We continue to be kind of mired in the fog of war, right? And so, kind of heading into the weekend, investors do tend to kind of be a little risk averse. As kind of Pete pointed out, we've been breaking some pretty key kind of technical levels over the last week, and you're starting to see from a market perspective, kind of the jawboning that's coming from the administration is not necessarily helping to kind of calm markets. And as we've talked about in the recent days when I've been on with you, that as the longer this kind of carries on, right, the bigger the potential range of outcomes and the risks associated with kind of higher interest rates and higher oil prices.
And I understand during times of geopolitical uncertainty, we see a lot of volatility, and then the markets even out. We're past week 4 of this. When do you think we'll see that evening out, if at all?
Yeah, so look, I think this is the 5th consecutive week of declines for the S&P 500. Right, we've seen about a 9% decline from the all-time high. And the last time we've seen kind of 5 consecutive weeks of declines was back in 2022. Right, if you look at sort of some of the technical measures like RSI, which is relative strength, we're starting to get into kind of short-term oversold conditions. We just moved under 30 today, and we're starting to see kind of the range on the days starting to expand, right? So that does suggest that we could be getting closer to a little bit of a technical bounce, right? But I think the real key after that is how markets react to some of those broken technical levels that we were talking about, right? So around 65.50, which was the October and November lows from last year, and then just over 6,600, which is where you have the declining 20-day moving average and the 200-day moving average.
ICE Brent crude was over $110 a barrel. Why are markets so reactive to oil prices? And do you think today's result is a result of the volatile and choppy oil prices?
Yeah, I mean, look, everything kind of does feedback in this situation to kind of oil prices, and oil prices, right, are not only impacting kind of the prices at pump, but it ultimately feeds in to other products as well, things like kind of plastics and then kind of the cost of transportation, right? So that does potentially have this inflationary kind of impact, which is kind of something that central banks are kind of are going to have to struggle with kind of as we move forward. And we're starting to see markets not only respond to the move higher in oil prices recently, but they're also becoming much more sensitive to the move higher in interest rates, right? So you have the kind of the 2-year yield is right around kind of 4% again. The 10 years around 4.5%, right? So we are kind of pressing up against kind of recent highs.
What will need to happen for the oil choppiness and volatility to stop?
Yeah. So look, I mean, the longer this goes on, right, the higher the potential for kind of oil prices to really start to dislocate. But if you think about where we were in 2022, you had ICE Brent was closer to 150, right? So right now things have actually kind of, all things considered, remain kind of pretty contained. In order to kind of really see some real relief here, you have to see kind of the Strait of Hormuz kind of reopen, right? We continue to hear the administration kind of talk about negotiations, right? But until that is going to be kind of a difficult process. It's going to be a difficult process kind of to reopen the strait without kind of Iran kind of coming to some sort of an agreement with Iran, which could potentially kind of entail putting boots on the ground, and that's like another whole escalation to this process, right? But that is kind of really the key. And then we also have to kind of pay attention to see kind of if the Red Sea, if those kind of those shipping lanes start to close, that would be kind of another whole escalation.
All right, Michael Rankin, senior market strategist at the New York Stock Exchange. Thank you so much for joining us. Josh, you can take his mic.